This is our Forex blog for Tuesday, May 17th, 2011. And like most days, we really want to trade the strong pairs versus the weak. The dollar has a daily, weekly, monthly trend that's up. The yen does too, shifted into a downtrend about 5 on the weekly, and then back to an uptrend about 7:30. You can see that the dollar had less weakness than the yen did, so when it showed up with some strength, you definitely wanted to take the dollar over the yen. One of the things I do is try to buy the strongest pairs versus the weak, and also try to buy the strongest pairs that were the least weak when they had a bit of weakness, because currencies don't move up or down forever. You can see even during this downtrend, it was weak for an hour, had mild strength for half an hour, weak for 15 minutes, strength for an hour, weakness for an hour and a half. They don't have pure strength or weakness all day. So what I find is the odds are improved if I see a currency start to show some strength and it had less weakness than, let's say, the yen. Even though the yen may now currently have more strength than the dollar, if it had weakness before, I don't know if that weakness will come back in 15 minutes or half hour, an hour. Whereas if one didn't have that much weakness before and it starts to go green, for me, my winning percentage is higher when I trade that way. That's a thing that I haven't mentioned in class too often. So when the dollar, well, let's start earlier in the day. The yen was clearly weaker than the dollar. So to start the day off, we want to find the strongest currency to buy. And preferably we want one where the weekly and hopefully monthly trend is up too. The pound, has a little bit of strength here, but it doesn't have a weekly and monthly trend that's up. The Swiss, the weekly monthly trend is up, but it doesn't have any strength at that point. The Australian monthly trend's up, and the weekly trend's down. So really, the Australian has the statistically highest odds of buying this against the weak yen. So we'll look at the Australian yen starting today off at midnight. And you can see this one already made a boost up. Our Trend Intensity Pro is showing a plus 20 reading. One of our systems is called Trend Explosion. Anytime that hits a plus 20 or minus 20, usually you can get into a trade on a pullback or a sideways consolidation. Here, after it exploded up and went sideways for about 45 minutes to an hour, and when it broke out, you wanted to get in that trade. I'm going to add the new tool that we're using now. This is a combination of 4 of our fastest and best statistical trend tools. It's called the FX IntelliTrend Fast Histogram. And I wouldn't mess with it, and you should put it on any time-based chart from a 1 to 5 minute. I use it mostly on a 5-minute chart. And after it loads the data, hopefully, there we go, you can see that, even earlier, right here, it was starting to show some strength, and it was above the hourly. It also had broken out from a narrow range 4 NR7 pattern on a 4-hour chart. Usually currencies that break out of these tend to trend, and it broke out earlier, and you can see you would have got stopped out with a small loss. The second trade broke out, the incredible strength came in, and it stayed in there. So, basically, if you started trading this a little bit before midnight, you might have bought this breakout right here, and you would have moved your stop up underneath the sideways range and stuck with it until it went to our upper containment band and kind of ran out of steam up here. Most of the time, the upper containment band is where the market stalls and reverses. Now, if you didn't get into that trade, I was saying earlier that we'd want to buy the breakout of this right here, but you could have actually gotten in a little bit earlier, because this was so strong during the up move. One pullback with a little bit of weakness, then the next bar, lost the weakness, and then the next bar actually went green right here. And when it broke out above that bar's high right here at 76, you could have got in almost 10 pips early, and there was tremendous strength all the way up there. So that trade worked phenomenal, and that was using the currency meter to find that. Let's look at a little bit later in the day other currencies that might have shown some weakness, or I should say some strength to trade this against. The euro wasn't that bad. The weekly trend and monthly trend's down, which is you're going against the longer term trend than this. But this one had quite a bit of strength coming in here at 130. So let's take a look at the euro yen to buy. This one also had an NR7 4-hour pattern right before the hour, and you can also see very close to explosive trend strength right here, which later on continued. That's the beautiful thing about Forex. If all the euro pairs are going up and yen pairs are going down, our tools are going to let you see it visually and immediately, and you can decide, you know, when to get in based on our two entry methods: pullbacks, short-term counter trend moves, or sideways 30 minutes to 2 hours rectangle pattern breakouts. So we're going to put the IntelliTrend Fast on here. This is a bar-by-bar analysis tool, how strong or weak the market is, and it's very fast. So first of all, even before this thing kind of broke out, we had a little bit of weakness, a little strength. The weakness kind of subsided right here, and when it broke out and it was above the hourly, you're in, and you can see pretty much strength all the way up. You know, the strength pretty much ended here around 8:30, and this is one of the reasons why I shorted this in the other room. I was short somewhere up, no, 50, yeah, 56. I shorted at 56 right around here on that bar, it looks like. You know, because the upwards momentum shifted to downwards momentum. And basically what you want to look at with our IntelliTrend Fast is moves up with a lot of strength and pullbacks with very little weakness. You know, especially this one right here is even better. You know, the market made a higher high, pulled back right here. There's almost no weakness whatsoever. You get in and you draw your fibs on the last wave up, and usually that fib target's where you want to get out of the trade, somewhere between the first and second fib target. This one's way above the upper containment band. We have a monthly pivot price right there. It's very likely to stall up there. And if you get a double top with less strength on the second top, it's a very high probability trade. This one happened to be strong up there until right here in this bar right here is the first bar of weakness. So if you shorted it right here, you can see it pretty much fell down, and there was no strength whatsoever on this little up move right here. This is the perfect pattern. It's the exact opposite pattern of this one. You go short, and I wasn't trading at that time, or I missed that short there for some reason, but I did short it again right here myself. But this trade pretty much, you know, continued down right to the hourly moving average. Let's look back at the currency meter to find some other ones. You know, high probability trades. The CAD, weak on all time frames and started getting weak at 7. So we have a very strong dollar, weak CAD, dollar CAD buy at 7, and afterwards very high probability trade. You can see this, you know, right around 7 right here. It went from 30 all the way up to 80. It's a 50 pip move. Let's look at it on the FX IntelliTrend Fast. And I know that Australian dollar was also a phenomenal, very high probability trade today, and it just kept going down. Now we have a lot of counter trend signals that show up on the chart. If you get a counter trend buy signal and the longer term monthly, and you know, you can see the daily, weekly, monthly trends up on this, you know, buying a counter trend level where it doesn't have that much weakness is usually a pretty high probability trade if you're going to scalp. So, you know, some of our systems in the past, we've focused on buying above the hourly and looking for sales underneath it. But if the weekly and monthly trend is very strong, like in this case, and you see a pullback down, counter trend buy signal, which are very high probability to begin with. Look, there's only 3 of them or 4 of them today. The first one worked, this one didn't work. The triangle here stopped the high, and this one also stopped the high. You can see the price, you know, pulled back from there, pulled back from here. This one failed, and this one worked. It was 75% accurate today. You know, our other stat tools counter trend signals. This one right here stalled the price for 2 hours. This one here nailed the high. These two are a little bit early, but the market did reverse soon after. You know, if you get buy signals in the monthly and weekly trend, in this case daily trend is up, it's, you know, higher probability trade. You get into that trade right here and you can see a little bit of strength coming in. You might have got out of this trade right here where the counter trend sell signal in the previous week's high, and then when it broke out again right here, the dollar was strong, the CAD was weak, and here are the next resistance areas, and the market kind of worked its way up there very slowly, but it did go up about 30 pips. Now normally when you get a pullback to the hourly, you want to buy it. You can see quite a bit of weakness here, you know, and the next few bars stayed weak. This bar right here is also weak. This bar, you can see, actually shows some strength. So when it breaks out over that bar, it found support at the previous week's high. You might have went long right here with your stop right underneath the low. And as it starts to go up, you can see, you know, some strength coming in, and then it kind of runs out of steam. you might want to move your stop up, because sometimes you only make 4 or 5 pips on the trade and it reverses. It's better to take that profit now that we have these new tools. If it wants to continue, just keep tightening your stop. And again, up near the highs, some weakness came in. The first sign of weakness was right here. It went up again, it ran out of steam. There was some weakness on this bar right here. You might have got out of your trade at 80. That's a nice little 30 pip move. I'm going to show the Australian dollar now, because this one also was later in the day was very weak, I believe. Let's scroll this forward here. You can see from 8 to 9:30 also quite a bit of weakness in this, and the weekly trend is down. The New Zealand also. Let's look at the Australian dollar real quick to end our Forex blog. You want to add the FX IntelliTrend Fast. I'm going to add these to my sample charts so I don't have to do this every day. I don't trade on this work machine, so I don't update the charts as often. So this one kind of went up, and you can see it kind of ran out of steam up there. A lot of weakness on this bar right here, and then it broke down underneath the hourly. So you go short right there. Keep in mind that the weekly monthly trend is down, so you're always better off looking to sell when the currency has a false breakout above the hourly and comes back down underneath it. Usually it's a high probability trade. This just adds to it. You can see that it had decent strength going up there, and this is the first weakness bar. You don't know the trend's going to continue, but once you get in it, your initial stop might have been right above these bars high. You're risking, in this case, maybe 10 or 12 pips. You quickly move your stop down, and this is an area where you're expecting it possibly to have some support. And this bar right here, you can see has pretty decent weakness. You might want to move your stop above this bar's high in case it wants to reverse. You only would have had a small 10 or 12 pip profit there, and then it continued. We got some counter trend buy signals, or Fibonacci areas that I draw every night. Very likely to be the end of the move. We're at the lower containment band. If you kept moving your stop down above the bar's high every time it went sideways, this is a very likely place to run out of steam. And you can see on this bar right here, there's a little bit of green for the first time in about 40 minutes. You're out of your trade right here around 15. Short around, about 70. Let's round down 3 pips. 60 pip move. Very, very good. Very strong trend. Using our new FX IntelliTrend Fast. This is not necessarily, it is a new indicator, but it's nothing new. It just averages together our FX tipping point, our FX momentum, our older, which is about 5 years old, FX Power Index, which shows the percentage of currencies trending up or down over certain fast-moving averages. And the last one is the FX trend candles, which is basically trend candles are Heiken Ashi, which are a very smooth trend indicator. And if a very high percentage of them are red, then it will contribute to these high readings here. So 4 indicators average together into one, fast and smooth tool. If it stays red, you stay with the trade. It's beautiful.